Today I want to speak about Upwork's earnings. Q1 2021, they actually did quite well, but too bad the stock fell about 12 to 14% at the start of the market and then started creeping up, saving 9%. So who bought on dip? Well done. And now they're sitting on a platform support of 40.541, which looks really good on the bottom. So is this the bottom? Is it time to buy? I want to share with you my point of views, charting, and where should we be going next with Upwork. Welcome back to Family Investor. My name is Alex Ko. The real reason is, why did Upwork drop so fast and then recover? One of the main key reasons why they drop is because the obvious one, they missed their EPS. They missed the expectation. They were expecting to hit EPS of minus 0.04, still at a loss, but they missed it by 0.06. So it's quite a substantial miss. But what does it really tell you? So before we go into detail, let's go to the second reason why it dropped is because the next quarter, the expectation of earnings also dropped to minus 0.05. Okay, so they miss expectation and pull expectation lower. So investors do not like that. But does that stop Upwork as a good growth company, as they're still focusing on the 35% target growth as what they announced back just after Christmas? So let's check Hyperchart. Hyperchart is a great place where I use to look at earnings figures. So I'm going to go to Hypercharts next. So here we've got Upwork, okay? Upwork, we know it's, hypergrowth company is valued for its future value. It's 12.8x as it stands just now. So we're already paying more than 10 multiple, okay? We're not paying the exact value, we're paying for the future value. So people say they missed their EPS and all that nonsense. But if you look at it, it's a nice gradual increasing chart here, okay? You've seen other companies like Apple and Microsoft, they all dip after Christmas. But look, Upwork has been just increasing every single quarter, okay? They even beat the last quarter. So the EPS miss doesn't mean they actually increase in revenue, but it's the fact that they have high expense, which I'll show later. So as you can see here, the thing that I like about the growth is great, but the thing that I don't like about it, because I want to see Upwork expand more in their managed services where they've got bigger companies they can serve. Okay, that's where Upwork will be great at. But it seems that the managed service has dropped, but the marketplace has increased. So that's where it's quite disappointing. But they're still growing. I mean, it's not easy trying to manage a company past Christmas and still get growing growth. So you need to give them the benefit of the doubt that business is still good. Look, revenue, operating income, it's really clear. Gross profit is increasing. The big part is the net income has decreased, minus 7 million. They've made minus 7 million loss. But think, as a business person, where did they make the loss? So that is good news. Margin increased, but the big part is you can see operating expenses have increased. Okay, so the R&D research, they've increased, and S&M, G&A, they've all increased. Why are they increasing? Because remember, competition is great. Fiverr is spending millions. Okay, they spend like 5 million on an ad at Super Bowl. So Upwork is trying to up their game. They're trying to spend more. And in fact, the CEO, Hayden Brown, has come out that rebranding. They're changing the color. They're changing the way they work. They're changing marketing. They're putting more money into advertising campaign, not just magazine. They're not going to All-Star route. They're going to the social media route. So that's where the money is being spent. So for next earnings, that's why the forecast it's coming down, because they will be substantially spending to grow their branding. This is expected for companies like this. And look, revenue growth is increasing up to 35%. So they want to meet their revenue expectation, they have to spend money. So if you are an investor investing Upwork, you're investing in future value. You're putting your hands in the likes of Hayden Brown, who's got a vision of future, but to grow, they have to market. They have to market for freelancers to come in. They have to market for clients to come in, especially those bigger clients, like corporation type clients. So this is where we are on their earnings. So the next part, I really want to go into my website, use my intrinsic calculator to really value with the data that we have now on Upwork, or what they're actually worth. So they're selling about $40 a share. Is it fair value? I would say yes, but not yes for this quarter, but yes if they keep making money. So the way I value is assuming that Upwork will be making profit this year, but they've already made a first loss of $7 million because of expanding. But they have to make profit. They have to basically break even. Once they break even, meaning zero or slightly above profit, and with the growth of 35%, they are actually valued round about, with my calculator, about 39.5. So it's about $40 per share. So they're at the fair value, just assuming they're making profit. But again, we pay for future value. So if up to Q4 earnings, if they start making profit, if they actually break even, make profit above, get the net income is actually plus, they should be worth $40 a share. So as it stands at $40, just now it's sitting right, like I said, at the support line. Okay. So for the next part is Fibonacci retracement tool to see what are the good buy trigger points. So for you guys, long-term investor who believes in Upwork, freelance economy like myself, then this is the plot for you. So for me, I plot the top to bottom on Fibonacci retracement. So I have already spotted the good support line about 40.5. Okay, 40.5. So if you want to go and buy your first trigger, buy it now at 40.5. But then if it does break the support line at 40, like I said, on the fair intrinsic value, then they will drop. And how far will they drop? They'll drop to $35. So if you're one of those prefer safe players, don't buy at 40, wait for the drop to 35 if they drop. Remember, today they actually tried to go as low as 35, but then the support grew and the support and buyers came in and pushed it back up to the next support line of 40. So it was trying to go 35, but then people go, no, it's too low. Actually, we evaluate it's actually worth $40 per share. That's why they pushed it up. So get it at 40. And then if you prefer, wait 35, or if you get 40, wait a bit of money left and get 35 and get a bit more, because at the end of the day, it's still growing. The company is still growing. It's good revenue, despite the mess, because remember, they're spending the money on good stuff like marketing. You don't market anything, you're not going to sell anything, okay? So if you were a swing trader, said, Alex, you're a swing trader on eToro, look, I've got eToro fair. So I'm thinking now, should I swing? So risk reward ratio. So 40 swing. If I do swing, I might be looking upside up to 48 to $50 to take profit. It hits 50, that's the next ceiling, but then I'll take profit early, 47, 48. Okay. So if I get in 40, I go to 47, 48, take profit. So I can potentially see between the next 1-2 months that it could potentially go up, because end of the day, revenue, they're going to start marketing, they're going to start enticing clients. You're going to see more and more reports coming in for the future freelance economy. That's what Upwork is good at. In their research proposal. But if you want, wait to go lower 35 and then swing upwards. So that's the way that I'll be going swinging if you're in the swinging market, or if you buy long term, 40 and 35. I think it's good. But if you were swinging, what would be the when would you like cut your losses? So cut your losses 35. If it breaks below 35, then perhaps don't take your losses from 40 to 35. So your losses is just from 40 to 35. So just to recap, if you're buying buy trigger, 35 and 40. But if you're swinging, buy at 40, stop losses 35, and then take profit at 47, 48. Simple as that. And I hope you find it useful. All right, so this is me on Upwork. I want to hear your comments if you're still a long-term investor for Upwork, or you're going to just stop investing in Upwork. For me, I think Upwork is still great. Freelance economy is one of my potential, 10x stocks out there that I think it's still good value, because we're all working from home, and there are more and more scopes that people, small business or single solo entrepreneur like me, wants to hire folks from Fiverr or Upwork. And Fiverr will be doing their earnings on tomorrow, so I'll be covering that as well, and then I'll evaluate between the two as the freelance economy is still going. As you can see, it's actually good data, the revenue is growing. So this is me. Leave a comment, like, subscribe. Hope to hear from me again for future videos like this.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Bingo! More videos. Bye!